We take a look at some of the more story stocks here and kick that off with Diane King Hall, host of Morning Movers, here to talk about Dell. First up. Hi, Diane.
Hi, good to see you. So Dell getting some love this morning. You got a little bit of the Santa Claus cheer happening here on Wall Street. We saw Santa ringing the bell and bringing some of those positive vibes to Dell. Street seems to like the forecast, in particular its AI-powered outlook for Dell. Keep in mind it's been an underperformer year to date, but today it has the wind at its back off the back of its results. It did post mixed results. Adjusted EPS came in at $2.59. That was better than expected. Revenue came in a little short of expectations, close to in line at a touch above $27 billion. The street was looking for $27.27 billion. But again, the outlook is what is making investors cheer this morning. The real story being AI here. They've raised their AI server shipment target to 25 billion and expecting 31.5 billion in fourth quarter revenue. That's well above what Wall Street's consensus expectation is. The data center segment jumped on big demand for its NVIDIA-powered AI systems, and this comes even as the PC business is soft, and we'll get into the PC business, especially when we talk HPQ. But Dell boosting full-year guidance. They've resumed the $1.6 billion to shareholders through buybacks and dividends, so they've got some strength there. Again, raising their AI server shipment forecast for the year. They're expecting to sell $9.4 billion worth of AI server, and that's not including any newly announced NVIDIA-powered deal. Full-year revenue guidance boosted to $111.7 billion. That's up from $107 billion. So again, blowout guidance for Q4, and it's really about the AI infrastructure momentum. Dell certainly needed this win, Nicole.
Yeah, even Goldman Sachs was surprised. They said the stock could rocket from here as we're looking at this. I mean, that server order, as you said, more than doubling over the last quarter. Pretty great news there overall. What about HPQ?
Yeah, HPQ is got some weakness today off the back of its latest results, and it's not so much about the quarter gone, but about what the landscape looks like from here. In terms of their fourth quarter, adjusted EPS came in at 93 cents per share. That was a slight beat. Revenue was $14.6 billion. Street was looking for $14.4 billion. So that is a beat, but they have cautious outlook, and they say that their cautious outlook reflects higher costs tied to new U.S. trade rules and a sharp spike in memory prices. So Q4 was fine, but the guidance is disappointing. Costs are rising because of the new U.S. trade rules. They say that the trade-related regulations are squeezing margins. In terms of the outlook for here, they're projecting a weaker than expected outlook and some cost reductions through layoffs. The company is expecting or planning to slash its workforce by as many as 6,000, so between 4,000 to 6,000. Printing is still soft. Printer revenue fell 4%. Customers delaying upgrades, and then you just have competition that has been hurting to this one. Now, its PC division did have some strength. You saw that rise 8%, and that was partly because of the sunsetting of Windows 10, so consumers had to do some upgrades.
Yeah, and it's interesting also, we were talking about Best Buy yesterday, and the sales projections, things were looking good. Also, a lot of the folks that got laptops and things during COVID, well, that was a long time ago now. Now it's going to be 2026, so there's new products, there's upgrade cycles, so they were talking positively about that just in general. What about Deere? Let's take a look at that.
So Deere, they've got a weak outlook here. So, and that's one of the things that investors are concerned about today. So the shares are under pressure, down 5% right now. So it's eating into the gain it had so far this year. The stock was up double digits before today's move. It may still hold on to a double-digit move, but again, some weakness today. In terms of the recent quarter, it actually was a solid quarter. Adjusted EPS came in at $3.93. That was a beat. Revenue came in at $12.39 billion. That was also a beat, but again, there is, some concern about the future from here. Tariffs are also a factor here, and then there's this weak, large agricultural cycle that's a headwind for Deere. Farmers holding back on big equipment purchases. Tariffs are just eating into profitability here. Deere is expecting those pressures to continue into 2026. And keep in mind, net income also fell, even though it beat expectations. It fell double digits, and profit is declining. So again, management is very concerned about higher tariffs, and they say warranty costs are also squeezing margins here, especially in small agriculture and turf. But Deere thinks it's nearing the bottom of the farm equipment cycle, so there may be light at the end of the tunnel. And Deere tends to also give a conservative guide, but still the street looks like they're selling first and asking questions later.
All right, Diane King Hall, and it is a turkey/birthday weekend for you. So
yes.
best wishes
Thank
for
you.
your birthday weekend.
Thank you.